Yeah. I guess it's hard to see. Let's see here. How do I show this better? Because I didn't do a good job of it. No, that's correct. Okay. Hello, hello, hello. Welcome. It's kind of for most of the market, it's a bit of a turnaround Tuesday. Starbucks is on a tear today. It's up 2%, which doesn't seem like a lot, but if you look at where it was Monday, it's been really moving. That's pretty far. It's traversed like the whole range it's been in. And I'm not convinced it's necessarily going to keep going, but I'm noticing a pattern throughout the market, and I think it's a valid thought. I don't know if the whole market's going to adhere to this idea, but I was just talking about it in the Discord group, and it's you use like generalities and stuff, and you say things in a very general way. It's not going to come across as that universal in the end. I mean, you're going to have some different, obviously, sectors and industries that react differently, and certainly your meme stock basket might do some very different things. But in general, I'm seeing a very common pattern here, which is that we look like we're missing on almost everything, almost across the board. Everything's sort of missing like another leg here. Part of the reason is because most of those that are in the S&P 500 basket have been in lockstep. So we have a very similar chart on all of them, and though there are some minor differences, they all seem to be kind of reaching a particular kind of peak on the next leg up. And I mentioned that it is possible that this doesn't go just yet. There's still more potential for downside. There's still more potential for sideways. But if you think of this as a 1, 2, 3, 4, and then 5, which is a very common occurrence in the market in terms of a waveform, just in general, you would have like that 5-wave impulse. Then this would be a 4. Now, I think that you have, again, some evidence here that maybe that's going to be more long-lived. For example, like on AMD processors, where this is at right now, it's kind of holding above the 4-hour. And previously, when it's done that, it's often turned up into a very bullish market run. So you might be thinking, well, if that's the case, then why would we not just continue going up? Well, I don't think that that's the question that I'm trying to answer here. I'm not trying to say what happens after this kind of market sell-off going into probably August. And I think that what I'm suggesting is that you almost universally, we have kind of like a last leg up here in June, and then we're probably going to have some serious correction going into August, and then at that point, I think we're going to continue probably upside. So, for example, this is the current setup right now on AMD, and you can see that the lower widening does seem to have broken. This is sort of a trend. It's a little bit of a widening spread. It seems to have broken out, and that would suggest you're going to come back up to 139, which is where the gap zone is and that ledge is, and it goes back to previous supports, which are now resistances that need to be checked. It even you could kind of like go without saying, but you could say like right below that, there's another gap around 130, and that seems like a pretty strong given. Now, if you look at this as a 5-wave, 1, 2, 3, 4, 5, then Typically the fifth wave, it doesn't have to be this way, but it's often similar to the first. So if you're going to do like the most bare bones and you don't want to use the Fibonacci extensions, so on and so forth, you can just kind of copy and paste this over here. And you can see this does indeed lead you up to at least this 130 to 133 level, which is right where that gap is at 136, and we're below it at 126. So there's really not like a lot of variation here. Most of these in the S&P 500 look the same. So I was looking through and I was like, yeah, there's kind of evidence of that throughout. I don't find, and maybe it's more tech heavy stocks, but I'm looking at a few different ones and they all look kind of the same. And so I looked at Doge today, same deal. Doge is one I haven't really looked at in a while. It's crypto, but it's also got this leg up, and then it really is going to be a big question mark. Is this an ABC correction, or is this a 1, 2, 3, 4, 5? And if it's a 5, then you're going to come down lower, and there's a long-term high probability chance it's going to come back to like 12.5 cents based on a number of things here on this wave, and the widening notwithstanding, because it's obviously right here in our face. But it's actually a bottom on multiple trends, and so there's a lot of question marks, sure, but there's a pretty clear intersection going into June 30th. This is very similar to what we see on the meme stocks like GME and AMC, which have some kind of a chance here. I think there's a pretty decent chance even that they may get another leg up here. But unfortunately, based on like kind of where we are in the scheme of things, I think we're finding that leg up may not be very long lasting. And I've done this multiple ways, and in either case, I can't really see an advancement here that doesn't result in some kind of a pullback going into the end of June and July. So with July, we have the July 11th deadlines for most of those tariffs. I don't know if the market's going to price them in, if that's what's going on here, or if, I don't know, because previously I'd had some indication that we might just run up into, we may just run up into that time frame and then sell off. But anyways, so I'm kind of finding this as like a almost universally true statement to say that like, well, almost everything looks pretty similar. So when I do stuff like that and I say things like that, I know that some people are going to take that to mean something completely different than what I'm actually saying, which is always the case because it's hard to sort of verbalize something and be clear about it and concise about it. But really what I'm suggesting is that there's an end in sight. And if you go and you look at, again, most tickers, like where this is Tesla, for example, it could go all the way up to all-time highs, It's got this widening right here, and a widening top that breaks upward would certainly go very far. But there's a key level of resistance right here at 375. And again, the continuation here, it could happen that's a very simple 1, 2, 3, 4, 5, and this is wave 4, and then 5 is going up. But again, this kind of wave 1 doesn't really take you that far. It really takes you to the gap at 406. And again, does this make sense? Well, yeah, because if you look at where the widening begins, there's only 2 spots you can pick here, and this is certainly a high on this widening here going down. This is certainly a high probability zone. There's a kind of a caddy or walk down right here. So like everything seems to indicate that is probably correct. Like this might hit 400, 410, and that's, again, just like AMD, although AMD's is different. The AMD chart doesn't look like it necessarily significantly go beyond the creeks outstanding. So of course it's different, but it's also got this kind of leg up in this position. And then if you look at like the indicators, almost all the indicators have had some kind of a correction, and then they're kind of borderline breaking out again, right? And I know Starbucks isn't one that everybody's following, and I get that. But it's got the M cross here. It's the pattern 1, 2, and then 3, 4, and then this is building outward now. It's starting to break out. If it goes up, And I know that I've got this over to the side. This is sort of the expectation. I think it could have a really big move, but I could certainly see like going into the 10th, it's stopping short because there's a level right here, like at $92, right? That's the middle of this big widening here. And it also is a hook value. You see what I'm saying? So this is kind of like pattern appearing of like, we're sort of at this crucial moment. And we talked about it with Apple yesterday where the slightest kind of advancement is going to send the market a bit higher, but not necessarily to the moon. And then when you look at the overall picture, some stocks look a little bit stronger than others. Some tickers have some significant advances that could be made. Others, it's a little less. And I want to look at AMC in a minute and kind of tie this back into what I'm saying. But I looked at Bitcoin as well today, which I don't usually do, but I did. And I looked at Bitcoin. I completely redid this chart. Let me add this one. Yeah, we'll add this one to here as well. I want to add the Bitcoin, but I think, I'm not sure. I think this is the Binance one I picked, but I'm not positive. I'll just do that. We'll see later on. But yeah, I mean, I've been going through and kind of looking at some crypto, and it's the same thing. It's like there's possibly a leg up here. Now, this could end up going all the way up into July, but it's like you're also at this critical motion of like you've made an SOS, so a little further, and you're going to be in a very bullish position. So for me, I'm like, a lot of this stuff is, it is up in the air, but it's all kind of the same at the same time. You know, and I'm not going to go any deeper on Bitcoin other than to say that I think long term, when you look at this, it kind of makes sense if the market's like hedging against these tariffs that maybe July 11th actually is a downside point. We run up, so it's going to go in the opposite of the market. So the market may correct a little bit before then. I think Bitcoin might run up till then. And there's a lot of evidence to suggest that 137,750 would probably be that marker. I'm not going to go any deeper than that, but I think that's very likely if it continues. Okay, it doesn't have some kind of a head fake here or something. Even if it had a drawback, I think it can still go up to that point. I think that's where the target is. All right, on Bitcoin, just for the record, that's my assessment of it. And that is a pretty big move. That's like, 40% or something, I guess. If you think about it as well, maybe not that much, like 30%, adding like another 30,000 onto 100,000. So it's quite a big move. Well, I'm talking about it right now, Last Riot. I don't know if you just joined, but I just said it like multiple times. So try not to sorry, that might come off as a little standoffish, but I just said it. I think this is like a wave 5. Now, I'm not even sure how far it goes just yet, but this is a 1, 2, 3. I think you have 4. And then, I don't even necessarily know this is over. This could just be an SOS, and then we need a backup, and it could run. But my estimation is that almost everything is like that. If it's part of the S&P 500, almost everything is like that. Once it gets that leg up, so this has us going up into July, but I don't necessarily think that's the case. I think you're going to hit that 5th wave here. And this is kind of the route it's taking, right? It's like you go ahead and hit that 5th wave. I don't see why you wouldn't have a longer correction, maybe even all the way back down, because we didn't go low, remember? So it's the same deal. It's like, because this didn't go down now, I think what's happening is you're getting that 5th leg up, and it's going to be over after that, which is kind of similar to the first leg. So it could go pretty high. It may even go up to all-time highs. It'll go to at least 600, which is only like a few bucks away. But I think it totally could go up to the top. I mean, maybe even a little above. But then I think you're going to have a pullback all the way to the bottom here because, again, they created this little SOW, which is really important. It has this downward trend built in. You see how the RSI already came like low, like it's starting to turn down. So this is going to advance even though the RSI is like weaker. I think that's pretty normal for a topping action. Usually you see that here, like this is an example where you see like there's this kind of like weakening happening and it's rounding off. Same thing here. The RSI is starting to like weaken and round off, but you're getting like extra legs up before like a bigger corrective phase. So I think that's probable. And then again, I'm looking at everything and I'm like, small caps are basically the same. I'm not seeing a whole lot of difference in the chart. Again, we didn't go down first. So this idea that we'd go down first and then react upward into July doesn't really make a lot of sense in this context. Instead, if we go up first, you're probably going to get a decent correction before then. Now, this is a very big widening, right? This is pretty huge for the small caps because they're about to potentially take off. I mean, if you look at the this walk down here, it's certainly a possibility that they just take off, go pretty far. I would suggest that, again, that might be the case because it's behind. The S&P 500 is already at its top. Small caps are pretty far behind, right? Certainly if it goes up to like 220s, I don't think I'd bat an eye at it. And that does make sense. It goes back to February all the way through December because that's where it was at the beginning of the year, was up here. So certainly that would make sense. There's a lot of hook values right here. It's an inverted head and shoulder kind of motion. But then what, right? Well, it's not that complex, you know? If you look at this as a bit of like a head and shoulder motion, for example, the time it took, it would go up until about June 10th. That's what I'm trying to say. Is like everything here kind of looks the same to me. And so the idea would be you'd push up into maybe this corner, maybe around 200, 225. But then I think you're going to go into a corrective phase until the end of June. I think it's kind of the opposite because we didn't go down early. If that happens, and we haven't actually broken out of this range yet, so don't count your chickens just yet, you know, before they hatch kind of thing. We haven't actually broken out of that range yet, but it's there, you know. And I think that, again, the wave breakdown here with the reaction back up certainly looks right to me. All the levels are correct. This is a really hot zone right here around really like 220 to 225, for example. But then after that, I think you're going to go into a more major corrective phase. And I could definitely see that lasting all the way up until those tariff deadlines, but certainly going down towards July 11th would make sense because if you've already finished that 5-wave, you would have a longer correction phase. And again, you'd be jumping this creek, so maybe even coming down to retest that, potentially very, very low, like who knows, right? We're not there yet. My point in saying all this was that I was looking at the market and I started noticing that like everything seemed kind of the same, which is you have this. I looked at a lot of tickers this morning, like a lot. I looked at I traded Wolf this morning, this bounce. I posted about it. But sort of everything seems like it might need to have this like extra extension. And the more I stared at all these charts, I was like, yeah, pretty much everything's the same. Everything looks like it needs a leg up, and now would be the best time, the beginning of June. But I think it's kind of like a Monday, right? You know how like sometimes on a Monday you get a really green Monday, and then the rest of the week it's like a retracement? I think that's what we're going to get in the month of June. That's my opinion. I think we're going to get like a real green Monday, a real green first week of June. Week and a half or so, and then I think the rest of June is going to be kind of red. That's just an opinion, I know, but I'm saying it from a technical standpoint. It makes a lot of sense because everything's like, again, on a breakout or verge of breakout, but nothing has like, almost nothing, unless it's already set really low, nothing seems to have this great imperative to run super far from here. Now, there are some that are a bit different, like MPW is one that it's setting up already really low. I mean, this thing looks like a pressure cooker, right? You can see it visually. It's on this like rising head and shoulder. It jumped this huge macro creek, massive, massive creek, right? So certainly like if this has an advancement into early June, I mean, it could be a pretty massive move. I don't necessarily think it has to go above 550, for example. Like that would be an easy place to sort of stop it for now. And we could still have this sort of delayed action going into August, which is where, again, earnings are. But I still see this as like, okay, well, if it breaks out here and chops down, like that's still a jump over this creek, right? So a big green move here, or even just kind of staying contained, if it's going to be like a 5 wave, I don't know, that could work. And just have like a longer corrective fade that's kind of boring. Nothing here looks different to me, so everything's starting to look the same. So I was thinking about how that's good because I'm well positioned for a lot of these stocks to run right now. And we were looking at Apple yesterday, and I'm not going to look at it extensively again. But again, almost everything in the market feels samey. Like, yeah, there might be a little more in store and maybe even a little bit of a big green move going into next week, potentially. But then I'm seeing a whole lot of deadness after that. Like everything's kind of coming to the end of the bigger run, like the big picture run, right? Which is this guy. So yeah, I'm looking at AMD, I'm looking at Tesla, I'm looking at Starbucks, I'm looking at Apple, I'm looking at IWM, I'm looking at the S&P 500. I'm even looking at like your Bitcoin and stuff like that. Apple's a little trickier because I think if it has that big run going into the 9th, which is again this kind of crucial date, I don't know what happens if it sells off for a month, But Apple's also very different than the rest of the Mag 7 because it's way behind. Like it's not recovered at all in a lot of ways. It's still down like 18% or something, 19% on the year. Whereas most of the others have already come back to their January spots. Apple has not. So it's, again, this is not generalities, right? I can say that and say most things look kind of the same, but you have to kind of take it with the caveat that, of course, not everything's exactly the same. There's probably going to be some that are quite resilient, whereas there might be others like your AMCs that may not be very resilient. And this idea of a sell down here may seem very benign, but you got to remember, like, some of these stocks are just different. Their setups are very different. So a sell down for AMC may not look like a sell down for IWM or GME, right? For that matter. So anyways, I'm going to come back to just talk about our AMC stock for a minute as we get this day going. I spent about 15-20 minutes just kind of introing and talking about a lot of things. I'm looking at a lot and thinking that there's certainly a chance. Yeah, I looked at heel toe can, and I don't really like the rebound it made. So I'm not sure if you're seeing what I'm seeing in that regard, but I'm not a big fan of this just yet. You see how it like pushed below the floor here? Now, part of me is like, that could just be a spring. We saw something like that in October remember the S&P 500 had that really big drop and it was like a diamond type bottom and then it bounces out and it continues the range. I'm having this kind of feeling of like, all right, there's something familiar about this, but the problem is it didn't come and make a new high. So it hasn't actually changed direction yet. So like on the big picture, you're like, well, yeah, but it jumped the creek here. Yeah, and then it went right back through it. So I'm finding this to be a bit difficult to judge personally. I think this is a weird advancement. So it looks like it advanced the creek, which was coming down. It hit that new low and advanced the creek, but when it advanced the creek, it didn't actually make a new high. So it's still in like a downtrend mode. And then it dropped back through the creek. So I'm not really a big fan of that. I don't know what that means exactly, but my guess would be that it's going to make a big reaction again into June, but it may not advance past like 1270 or something like that. And if it doesn't, I think it's probably going to come back down again going into maybe July. And I'm guessing at this point, and it's I'm guessing at this point, it may need to revisit at least 11, which is like a 50% retrace here, 1120. I think if it can do that, it may be ready to bounce out because then it's like come over the creek twice. It's got some comfort there, I suppose is the right word, trading along it. I think then you could have like a secondary motion up and out. But until that happens, I kind of see this as a Maybe it goes down to 10. Maybe it goes down to even 850 still, because it's generating like this much wider push. And because it didn't turn around here, I'm not positive this is going to work in its favor just yet. And in most cases, if you saw this bounce in and it continued to make lower lows, you'd have to see a higher high and then a backup to really confirm that direction's changed, even if the creek is broken. We don't have that yet. So I can't say that I think it looks great. I just can't. That's the way I trade. I look at whether the trend has changed, and then whether the wave is crossed and it's got support. And if it doesn't have that, then I'm not a huge fan just yet. So, I mean, MACD's one thing. I'm not saying it's bad. You have to understand what I'm saying is that if this has another push up, what I would want to see if this is going to push up again, let's say this is a corrective phase and it doesn't get hung up. If you want me to be bullish on it, yeah, like short term, could this go from like 11 all the way up to 14 or something? Yeah. I think short term, if you're looking at a run up that's kind of squeezy, maybe we're looking at an extended run for something like NU, and it goes up going into next week. It could even pop up to like 14. That would change my mind about it, because if it came back high, then we could have a bigger correction, right? We could come back down and have a longer correction going into July, for example. And I probably wouldn't feel as sheepish about it. That makes sense? But like right now, that would look bullish to me. But right now, I don't have that. So it would be a short-term trade from here up. And I'd have two levels from 12 to like 13 maybe right there, and then up to about 14.30. Yeah, that's what I'm saying. So it just hasn't done that. So if this is a 1, 2, 3, 4, then yeah, 5 may get you there. Maybe just barely. And that's good. And if you're looking for that, that could be a really good trade. I mean, it's not a bad, that's a 20% shares only trade, So again, I'm kind of thinking this is pretty universal in the market right now. So I'm thinking that's the case. That's why I'm bringing it up. So for AMC, if it makes more upside, where does it go? I've done this more than a couple times, and you guys know that early on when we were doing these targets, there were some pretty high ones that came up. Later, what I said is that I didn't really like the way it was building outward on the bottom, because it wasn't developing A, quickly, but B, it was doing this kind of pump with these massive retracements. And it made me feel like they were going to cook the on balance volume and without actually achieving like really ridiculous highs, which they are doing, by the way. The on balance volume's quite elevated compared to where it was, and yet we haven't really made any kind of massive recovery. And we saw that especially with like the RSI on the daily was like high as it was back in May, right? On that 300% move. Again, using the market mechanics, they're abusing them, I should say, last time in order to keep that RSI from getting like way oversold, or overbought. And we're seeing something similar now. And I noticed that from an iteration standpoint, I marked it off. So we had, sorry, I'm going to just finish that thought. So like I had multiple, let me do this first. I had multiple targets from a while back. Some of them were kind of simple stuff, like let's go fill the gap, right? How could we get up there? That's pretty far. Others were like, oh, well, this is the top of this widening, so you could hit the top of that widening again. That'd be kind of crazy, but you could do it. Some were like, oh, well, that widening intersects this hook, and that hook is there. And those were ones that we revisited, I think, last week. We may have talked about it a little yesterday, but we really talked about it more last week. And then there were parallel structures coming down, and then we had different ways of interpreting how the reactions should happen based on liquidity levels and like where those liquidity levels are. And I mentioned that 461 was one that came up mathematically quite a bit. It's actually here again, which I find really interesting because that one was pretty obscure. I remembered it because we had back here we had done the P&F chart, and 461 is actually the most commonly used. It's like 460 to 462. That's actually the most commonly used support in this range. You may not know that. You may think it's like 430 or something, but the 461 on the P&F was like one of the only visible bottoms. It wasn't, and it was a 15-cent range or something we used, or like a 10 to 15-cent range or something. So it was a little bit of a block range, but it was interesting because that ended up being one of the more critical supports. That one, obviously, when we left, did not get tested. So I was like, well, that's interesting, because then it was coming up in some formulaic kind of discovery that I was doing back here. And I was like, it's a really weird number, but it comes up quite a bit. And it had a lot to do with the math backwards as well, like how you'd come back down, how it measured out. I think it went from like this bottom to doubling the values. And what we did is we doubled the values, and I used 335 from the bottom to 335, because I said if this is the middle value right here, then if we double that, you get 461, which is kind of a weird number. But then it made sense, because I was like, well, 461 was this massive support region. And then we went back later and we said, well, it's possible that it's not, it's really possible that it's like one of three numbers. Unfortunately, one was 13. It was like 317 or something. I remember it was a really bizarre number, and then it was 3. And that just made me feel like not good about it, because I was like, well, you've got basically 3 different possibilities, and all 3 looked pretty good. And it was really dependent on, and you have to understand, we were doing a comparison to itself. We were trying to understand what would be targeted here as a middle. And that was really important to what we were doing at that time, to understand which one was actually the middle. We were using on balance, and it was very confusing. I wasn't really sure in the end. Both of these are these kind of drop ledges, and that's where that comes from, because in the on balance, you can see the middle is probably centered around one of these spots on this parallel structure, but I wasn't really sure. So it was this top, this bottom, or it was this drop-off ledge, which is really more like 305 or something like that. And all of those looked pretty good. So what I did is I did duplicate values from the bottom through those variables. And that's how we got some really low numbers too, because we went through like 305, for example. You go through that and you only get 380, right? And you're like, oh, well, that's pretty darn close to where we ended up. Yeah, I know. You know, it's one of those things. And if you go through where it kind of just clicks. If you go through that bottom here at 314, it's almost exactly where we ended up at like 406. Again, mine is a cumulative technical analysis. I try to gain as much data as I can. So when I do these measurements, I'm thinking about it as a cumulative effort. I'm thinking about how like that is probable because it's coming up more than once. There's more than one reason to go there. It's not just this measurement. It's also clearly an important liquidity level. So the fact that the market already blocked it out, and that we're seeing evidence of that in the on balance, and then also in where these drop zones are and the distances between them, that's pretty obvious evidence. It's like footprints again. It's like fingerprints or something, right? You're seeing like how the operators are setting up key levels, and they're leaving these little breadcrumbs, not necessarily for each other, but because of mathematical consistency. It's a self-fulfilling prophecy, right? Because then what happens is that you get to these places later on and you look back and you say, oh, well, a 50% retrace now takes you back to this key level. And you're wondering like, well, was it, how did that come about, right? And it's kind of exactly what you think. I think it was already, you know, part of you would say, well, the reason it's doing that is because that was there. And I'm like, yeah, but why was that there? Well, it was there just because it's a simple level. Well, 317 isn't a simple level, right? It's a weird level. Well, it must have been from some other measurement. Yeah, probably. You know, and we could spend all day trying to figure out where they got 317 from, right? Maybe it's as simple as, well, you just go back and it's right here, right? It's the break. It's where it broke out. You know, it only went back to 317 on this day. Yeah, okay. But then where did that come from before? Oh, well, it was this value over here. All right. Yeah, that's cool. That I agree with as well. But then where did it come from before? It's like you could just keep going back and back and back And it's like, at some point they establish this number and then it becomes important. The operators that are moving the price around more often than not are using these key figures in their calculations. So I'm aware of that. I'm not saying that that's some kind of mystery beyond just exactly what we just said. Like at some point it was used and then it just keeps getting used. But you have a consistency there that you can kind of use. And that's why I know that I talk about this idea of 50-50 a lot. I don't think some people take it very seriously because they think I'm just kind of using like some kind of tool that I found and I don't know, like I don't understand what I'm doing. I'm just kind of measuring everything 50-50. I'm not. What I'm doing is I'm looking for specific ledges. Like this is a real clear one because there's a support right here that's like broken and then it turns into resistance. And I don't know what it is about the 50%, but again, maybe it's this idea of the golden pocket and the assumption that when you build out on something, you get this kind of slingshot effect of like doubling up. But it often is the case that that 50% reduction plays into what I would call like an offset, where it can design itself as an offset. So if you have a certain measurement down, and I've done this before, for example, like if you go from this drop to the bottom, right, this interval right here where they design that 50%, obviously like on the way down, this is clearly like used as a sort of a base of operations. We're going halfway there. We're going to gap down and go halfway there, spend some time, and then go to the second half, and then do it again, right? Well, this becomes like a valuable integer, right? If you know how to use it, but you have to know like, oh, now we're looking at this bottom to this bottom. Well, how is this used later? Well, I almost guarantee you it's probably going to be pretty equivalent to like the breakout here, and it is. And this is the kind of stuff that like becomes, and you're like, well, yeah, of course. Yeah, but this is offset. So how did you get from A to B, right? If it was offset from this support up to here? Well, it's offsetting it is what it's doing. It's generating like an offset. And this is the kind of stuff that I've picked up on that I'm like, oh, so this is how we're going to do things, I guess. This is just an easy way to build out structures in the market so you can get adequate retracements and get the liquidity grabs and stuff that you want. So when I do this stuff, I'm not willy-nilly just dragging a 50-50 to any point. That would be a little silly. You could do that, and it probably worked to some degree, but I'm specifically looking at these kind of key breakdown levels almost always. They're almost like always tied to these drop ledges. So there's one here at 406. There's another one kind of at this bottom at like 485. 485 being a really important level from way back from like February of 2024 and then onward. You know, these are markers that are significant. And yeah, they're also acting somewhat as supports and resistances at times on a horizontal scale. It's not like some great mystery, but those are the ones that I'm thinking about. And then I'm thinking about first leg versus second leg. And you have a first leg, second leg here, but you also have a first leg, second leg, like on a bigger picture, right? And that's where we start doing these measurements and applying them in a forward thinking way. And probably, though I'm not positive, probably this measurement is another offset, like just like this one was, where you have this bounce out and this push up. This is a larger bounce out and push up. You know, it is. So like naturally, this is probably going to play some role, and it does. You can see that the gap right here down to this floor where this first bounce out and push up happened is the same as this bigger bounce out and push out. Well, how do we know that that's the same thing in theory? Because of iterations, because you see the markdown happening here, it's happening on in the same way, but on a bigger scale, on the bigger picture. So just like this is an S curve, and we use that measurement to understand, oh, well, the offset was right there. We just did it a minute ago, right? Oh, well, the offset is, you know, here. So they're clearly using this as like a way of kind of structuring. We're going to travel from here to here, then we're selling it down lower, and then we're buying back up. And that's the reaction. If you had to ask me why I think this really is happening, I genuinely think this is like the short positions covering. I don't know why it would be perfectly one-to-one other than like something like that. like the structure of buying in on these shorts here and then continuing the sell off and then getting out and having that kind of reaction up. Again, I think it has to be the exchange of shares in a more of an equal parts manner. So you look at something like that and you're like, well, that worked really well. Yeah, naturally, you would say that. But then you could also take that same thing and apply it to a bigger picture and say, oh, well, that actually works really well then, doesn't it? Yeah, it does. So we're not going any higher, is that what you're saying? Again, when we talked about this, we said that it was very possible it does not go above 406. Now, these other markers come up because of other factors. So it's not a one size fits all. Yeah, no problem. It's not a one size fits all thing, right? But if this works here on the small scale, then it likewise could work on a much larger scale. Granted, I'm kind of fudging some of these numbers because I'm like obviously using this portion and that portion and all this other stuff. But I'm saying like this is pretty simple math too, because at the same time, this is a 50% retracement from a certain ledge. This might be a 50% retracement from top to bottom here. I don't know. And these are, again, mathematical kind of certainties. Yeah, it's about to that top at 655, which is way back up over here. So way back to this ledge. That's about a 50% right there at like 406. So, I don't know what exactly is being measured all the time when I do this stuff, but I'm telling you that it generally works quite well as a good estimation because it's one of those numbers. I think that's why GAN TA works really well too, because GAN TA just divides it in half and then half again. So it divides into a quarter system. And I think the GAN charts that you can use, they're like fibs, but they're a little different because they don't always include the 618 and the 382. But they always include like the 0.5, the 2.5, the 7.5. And they're generally pretty close to the fibs that you would get, right? The 2.3 and the 7.8, but they're slightly different. It's a very simple way of understanding. I think GAN did it first. So I'm not saying that I did anything novel here. But that concept is pretty prolific anyways. So what we did is we looked at that and we came up with some markers that we thought might be good. So when I look at 335, which is kind of the highest marker here, that's sort of where my eye is drawn, is like that's kind of the highest extension. And that was at 460 area. 461 up to like whatever. And we looked at that and I was like, yeah, that makes sense. This was used as a pretty heavy, just look at it visually. You can see like this could easily be an area right back here that you'd want to come back into and check out again, especially since we didn't do it on the way down. We just dropped back through it. This would be a very smart place to come back and do a stage distribution. Not only that, but then you have the addition that, well, if we go back and look at 2020, we see there's something kind of similar in that build out. So if you want to have like that comparison, you can also do that. You can see it came pretty high. And you can see the place that really that distribution started to be staged wasn't exactly on the bottom. It came up above. It was kind of like a common support and resistance in there, but it wasn't. This did hit the middle, but then it really starts distributing right around, almost like the middle of the middle, right? It's what it looks like. It looks like the halfway point. Oh, the halfway point. Kind of dividing it into quarters again. Works quite well. Yeah, that's what's happening here. Each one of these is like a leg down. That's interesting. Anyways, so I look at that and I'm like, all right, well, that doesn't really give me an answer, but at least it gives me some ideas and I can move from there. So I was looking at this and I thought, well, if the market runs up, I think it's going to depend largely on where AMC is when that happens. And we did some, and I think in general, like with GME earnings around the corner, if GME gets a pop, then AMC probably will go with it to some degree. But there's certainly some kind of key stopping points that you'd want to watch and pay attention for. One would be what happens down here is very, very important. So I marked it off. Now we're kind of in the actual like kind of meat here. So when this started changing direction is right here, which is on April 30th. Yes, there's a bounce out and a higher push. Arguably, that's clearly an important bottom. No one's saying it's not. But what I am saying is that this is where the change of character happened, and then it jumps the first creek. So I think it's right here. I took note of those first 3 hits. There's 3 hits right here, and then there's kind of this bigger reaction up. And then if you look at that 1, 2, 3, it hasn't actually made a third hit here. There's not one yet. And I looked at where that was, and I was like, it's kind of right where it should be if you look at Wednesday roughly as potentially a low. If it were to go down in a shallow S-curve, it could dip right beneath that 333 level where we had like a triple bottom of sorts and hit maybe 330 or even just slightly below at 327. There's a gap there. And that kind of puts it right in the pocket of a strong rebound / spring, because there's another thing I'll talk about in a second, which is the iterations here, the way they build out. Top is with a specific kind of a pattern that we've already addressed, which was this kind of like buy in and then sell back down, buy in, sell back down, buy in, sell back down. They're getting weaker as they go to some degree, and we'll get into that. Meaning they're showing like their teeth because more people are selling, probably is what's happening. It's that simple. But this makes sense to me then, if it holds here, that this would bounce back above and probably head back to the top. Beyond that, I think you're in a bit of a speculation land. You can say whatever you want to say about the continuation projection here, but I think you're kind of speculating as soon as you get above 393, everything else is sort of bonus, is what I would call it. Because once it gets above 393, anything here is really, again, just about going back to these previous levels and doing a quick checkbox. I don't think the design is, again, to continue after. So what we saw before was oddly similar, and that is right back here. And I mentioned this previously, but this particular jump with that backup, it's a very significant motion, and it goes backwards to... and I don't really have it drawn very well here, but it goes backwards to this build out that started last June, where we have this kind of development of a trend down that's starting to build. And we find that later, this becomes a really critical marker as it goes along, this halfway point from the bottom to the top here. And it's used quite a bit. And in one of the places it's used, and I don't know why I have it like where it is exactly, but one of the places it's used is in both the breakout here and the breakdown here. So I'm looking at the breakout November 19th, which is around 4:30, and then the breakdown at 4:10 on January 7th. And that's essentially like the support and then the hook. So when we talk about wave formation, and I know it's a little bit, I'm like kind of going back and forth on it, because I think the way I drew this is slightly off. I don't remember when I slapped that on there. I think that's right, because I think it goes from this bottom to that gap. Should be where the gap is. That looks better. So, I mean, that makes it look like it's below it right now, but I think that's okay, because at the end of the day, like, it doesn't really matter. I know it looks weak, but at the end of the day, it doesn't really matter if it jumps back above here, because that would be, like, jumping back above that level would be obviously very bullish. So I'm seeing that as a very similar kind of build out where you're advancing pretty far and then you're backing up. And I don't know, maybe there's a parallel structure. I haven't really checked. Yeah, it looks like it, because that's the same top as this top. So again, could it be that it just stops short of going way, way high and only hits a certain level? Yes, but again, the 461, it's there, man. I don't know. There it is again. So I don't want to go like way more complicated than that right now on the 461, but certainly like that could be it. It could be it. We've talked about it. So it's a doubling up value. And then the 540 is really, in my opinion, it's just way out there number. I don't know if it hits it. Maybe it hits it in extended hours or something. I don't know. But this has seemed fairly reasonable for a while. So I'm like, okay, maybe it hits 461. We talked about 430 to 460s as like kind of the high end. I really thought 430 might be more reasonably, from a conservative standpoint, the highest. And that has to do with other variables here. But 461 is presenting itself again as a likely target. And from where we stand, if we were to go to 461 down and we were to use these parallel structures, you can see like the bottom here that was created at 333 is a very nice 50% reduction. You see that? So that's the ledge. Let me show you up close because this is kind of a mess. So there's another 50-50 again on these parallels, which I just marked off on the above, and that actually takes you up to the top. So those are pretty much equal parts away as well. But then if you look at where this bottom was right here at 390, and you look at where that bottom was here at 333, and you double up that value right there, you get 457, 458. It's essentially taking you right to that spot again. So that's very clean. And we already saw that there was an intersection here. You can just see so many different things correlating to a possible move if it wants to be taken. And I say if it wants to be taken like some unknown entity, because I don't decide that, right? I only can just kind of read the chart and say, well, it's there. It's a really clean path. And so if it starts that direction, I think it's a very high probability. So you've got a stop zone at 390 to about 422. So it's got to make a bit of an SOS here. That could take a moment. And then I think from there, you're really just looking at 460. The 541 is curious because if I go to this kind of initial breakout moment, there's a high volume push up that happened right after earnings right here. I think that's the first iteration. Right? There's kind of a double whammy and then it comes back down. I think you have something similar in that in the rest of this where you get kind of a double up, but sometimes it's a little out of order and I don't really care that much. I'm just kind of looking at the bottoms and the tops right now anyways. But I went to that first big buy up where it kind of popped up and out after hitting the lows around 265. Remember that? We were like, yeah, I can't go back beneath 265 and all this other stuff for like several days. We were like talking about 265 for like a week. And now we're like, it can't go beneath that or it's going to drop again. We were doing diagrams to talk about that and it never did. So it ended up being exactly as we thought, which is it didn't go below that. You're like, exactly as we thought. We were thinking it could go down. Well, we didn't know, but we knew that it couldn't go below 265 and it didn't. And that's where we come to, so we did it right. Yes, we did it right. Because we knew that was a critical level. It was pretty easy to do, okay? But we did that 265. This is the first big push out and away from it that we have that really started breaking out of creeks and then advancing. So I used that, and if you can see I did two different, it's just very odd, right? But there's two completely different markers. So if you use like a fib fan, you would have found that it doesn't line up, right, with this and this. You can't do it. Oh, that's because it's parabolic. Well, okay, I can't do a parabolic fan, so I can't do that. What I can do is I can draw from this top to this top, right, from this peak to this peak. And I can also draw from the first top, May 8th or whatever it was, to the second top, which on the 27th. This is obviously very fascinating stuff, right? Because it should come as no surprise then that on the 9th, these intersect our two targets. Really? Yeah. So again, like cumulative TA is very, very useful because it gives you an idea of high probability targets. We knew that 403 was a high probability target, 403 to 406, very high probability target for a number of reasons. And then it hit. And that's great. Doesn't always hit, but it hit. And that's great. We now can see that this, if it were to build out again and have the jump, and it needs to make the jump here, so this is important, the 360 level. Again, 363, that's going to be the first big marker. And then the second big marker is going to be right up on top of 391. Those are the two big levels. Hits those two levels, it's the next two stops are the same ones we already got. That's useful information. It's triangulation, basically. Because we're finding that is intersecting a liquidity shelf and an angle upward. And then it's also, again, a 50-50 from the bottom. Very, very nice. Now, the 540 is not a 50-50 from the bottom, as far as I can tell. Maybe if you go up to like 367, it might be. But the ones that we picked out, it's not. So maybe it's a 50-50 from this drop ledge here around 374. I don't know. We can try it and see what happens, but I'm kind of doubtful. Yeah, maybe right there, 365. It's pretty close. And that makes sense because this would have been a 50% retracement right here before going the rest of the S curve, right? So sure, it could be that case that it goes all the way back to the top. But again, I find that to be a bit silly. So we'll see, you know. Oh, and if it breaks out, it's not silly. I know, but I don't think it's going to break out. So my point is that right now, 461 seems like the highest probability target if it does have another pop. First, it needs to get over 362. But I think if it gets 362 and shows some support and it has some good buy-in, you're probably going to go ahead and make that advancement up with the rest of the market to some degree. And it makes sense if GME also has that pop at a similar time. Well, then what is this? Like I said before, this presents itself like it's going to be a full S-curve. If the S-curve fails, and it already did, it failed to make a higher high right here, which is fine, then you know that it's going to try to go low. You don't necessarily know that it's going to go a full 50-50, but you know that if it fails to make that advancement, and I was just talking about this on NU, it failed so far to make that advancement, it's going to come back down, right? That's typically what happens on these motions. And so, yeah, you got a triple bottom of sorts, even though this last wick still to me looks like it dips a little low, like a weakness. But it would seem to me that this could be either a shallow S-curve, which is one that does not complete. Basically, it's it's selling down towards a floor, so it's generating like a downward motion, but it's not actually going to go that far. It's just going to spring beneath the floor established, which I think is what's most likely. I said yesterday, if I have to pick one, I'm going to pick the shallow S-curve because I think right now that seems the most likely based on volume and everything. The other option is it's going to continue down in a full S-curve, in which case this comes really low. If it comes really low, I have a difficult time believing that it comes back above 350. And if it did, I would be even more surprised if it came back above 4. Because if it drops down to the bottom, it's now kind of going back towards, first of all, it's obviously a break of this trend. So you have to deal with the hook. But then in addition to that, it's kind of like, it puts you in a bad position because the run-up itself, it's almost equal parts from gap to gap. So I find that to be a bit challenging. Like that motion right here and this motion down here. It's like, yeah, I could see it maybe stopping short at like 380. Even if it has like an extension here, because now you've got to deal with the fact that it broke down and now there's another alternative, hook. And we'd have to look at what we just did, which is this guy. If you offset this down, it's going to be like perfect. I'm not eyeballing it on purpose that way. It just is that way. And that puts you in a bad spot. This is like a breakdown zone. Well, which is it? Like I said, interpretation's one thing. Doing the measurements is easy, in my opinion. I think it's there. It's just measuring stuff. If you can keep track of the valuations and the math, you're going to find that makes sense. There's a cat ear right here going down. You can see that directionally. There's a breakdown on an ice there. Those intersections are right around some pretty macro intersections of areas that you wouldn't want to like drop through. This uptrend here, these two downtrends, which are crosses and or parallels. There's so much stuff right there at 350. So if you drop it down to like 293, you might get a big move. It's still a big reaction, right? You might get a 20% run, 22% run, but it's doing so from a very low value. So GME has this great run, wonderful, but if AMC is doing the same run from really low, it doesn't put it in a good spot, does it? Now, that being said, a shallow S-curve is different, doesn't complete. Instead, it's building out with a bit of a push, but it doesn't quite make it. And then you don't see the big pickup in sellers. Instead, you get a sudden turnaround. What this would probably look like, and what I said on the beginning of the week, and I can adjust it now that the week's kind of moved forward a bit. it may not budge at all much past 350 or 360 until next week. There's a possibility it runs up really high, this week on a Friday or something. But I think it's very likely that this could end up, I'm kind of just moving it over because I think the timing is off. I think this ends up being like a dip here that actually reverses maybe midweek going into Friday. And that does to some degree comfort me, because if it happens that way, then you're going to have a bullish candle. You're going to end up having what appears to us on the weekly to be a green. You should, right? Because you'd have an open and close value. And it may not be that perfect. We'll see where it stops. But you'd have a pretty bullish candle with a long wick below, like that, right? On the weekly time frame. Potentially a hammer, and I said maybe a red hammer depending on when it gets there, But if it ran up like last minute, you could have a pretty decent like hammer style candle or high bodied candle that closes above, especially if it closed above 363, it would be really strong, I think. So that's a really important marker right now. So I'm of the opinion that that's certainly a possibility. If you wanted to have a really bullish action the following week, you could have that move out. What's going on, folks? Y'all tracking with me? I hope so. I know I go on and on a bit, but sometimes it's important just to try to recap. I think I can get to the point and just say, here's what I think is going to happen, which I am. I mean, that's what I'm saying right here. But I do feel that it's necessary at times to try to kind of start over a little bit, go backwards a little bit so we can go forwards. So this is pretty close to what I might expect if it does have that run up. The total run up is probably, again, if it goes to 461 only, that total run up is probably going to be somewhere, no, I don't want to do that, somewhere around 40%, which is a huge move. And I think we talked about this on GME as well, but I want to say it was something similar. Yeah, this is a 40% move on GME. It's interesting, right? I'm not sure what happens with GME here, but if that goes up, it's 50-50s around the current wave. That's a 40% move from this bottom to 50% over the top. That's 48%. So it's actually very similar. It's quite interesting. So I'm thinking it's a very strong possibility. Now, I've still got my chart saying that it goes up really high. I don't know where it stops exactly. But if it stopped here, I wouldn't be overly surprised. And this is kind of what I want to get to right now, is that at this point, at this junction, if it makes that drop, you're going to have, and maybe even dips through here a little bit, you're going to have an SOW. I think that's going to be the signal that we're about to go down. So if we see it dip beneath this red line, and then it rockets the other way, I think that's the signal post that's telling us like the next step is actually this white line below. And I genuinely think, again, it doesn't really matter if it happens here or here. It's going to eventually have that hook built in and go down. What's curious then is that the trajectory upward kind of finishes pretty strong. Now, I've done this white one going up. I think that's important. Don't get me wrong. I kind of think that would be more of a middle if and only if it goes to like 540. But I think if it doesn't go to 540, I'm going to do a dotted line. I'm going to use this guy as the main trajectory right here. And this goes up, you can see pretty clearly. And it kind of makes it look like it's not going to go up as high. Kind of makes it look like it might stop here. Or maybe even go Wednesday into Thursday, take a little longer and get there a little later. But it looks like it goes up to 460. That is going to be probably the clearest trajectory that we have. And it's debatable. And the reason that's important is because that trajectory, I'm going to make it kind of a pinkish color or something, lavender, I don't know. The reason that's important is because that's a 50-degree angle. And what we would want to do is then have an alternative angle. This is not rocket science, pretty straightforward. But usually what I'd do is I'd say, okay, if that's the pivot, I'm going to just place it right on there and see where it goes. this implies that when you come back down, it gives you kind of a rough estimation of timeline. This implies that you could be all the way back at the bottom around 260s, okay, by July 9th or 8th. Does that make sense? Well, yeah, July 8th and 9th, we're thinking that it might sell off into, we just said that, like it might sell off into this time period, right? Of where we think the tariff stuff is. So I don't know, exactly how it travels. Usually there's a breakdown that looks a little more like a head and shoulder, so it'd come back up to like probably 390 or something. It'd be a pretty major drop first, because typically maybe down to 350. Typically that's going to evolve that way. You're going to have some kind of a head and shoulder looking thing. Really what it is it's a breakdown and a hook, and the hook often looks like a shoulder to our naked eyes. That's the way we see it in the market. And then we would have, again, the very strong likelihood that this, again, doesn't use it as a support, but it kind of develops into a sort of a falling head and shoulder motion. So the next shoulder mark is at like 320. So, I mean, you can see how like walking backwards, and that, frankly, if it goes down to that marker at 290, that could generate an SOW on the bigger picture here for the white line. And you can see how this sort of builds itself out now very quickly into a distribution because especially if it didn't hold there, if it goes down to that marker, it's going to be an SOW on that mark. So yeah, so the rest of this becomes irrelevant. I don't know. We don't really need to make it perfect, but there's a sense in which, sure, like that could be the case. I don't know what happens from then on, but what we've talked about is that there's a probability that this kind of turns into maybe a bullish action at first after the 11th. So I would expect some consolidation or something. And again, if it's going to go low, you may have some weakness here. This is the great thing about when you start piecing these things together with just basic, directional geometry. It should make sense. And at the end of the day, it does, because this then just looks like a paw with a cat ear. Like, that's exactly what you would expect. There'd be some kind of a breakdown here if it's going to break down, and then it would go low. And then you push yourself backwards further, and you say, well, where is the actual middle? Well, we were talking about it. This is kind of the wave breakdown right here. There's a second spot, maybe slightly lower at 3. But it's definitely either 315 or 3. That's the middle zone right there. Right? So when you enter, you bounce off that range, you travel through it, and then when you exit, you bounce away from it one more time. So naturally, like, this is the place of deepest concern, but that's where you'd have the 50-50 rotation if it happens that way. So we can go to like 461, come back down, and we can do a 50-50 rotation around 299, and that gives you a really solid level of 193, which is right in line with where it should be landing, compared to everything else we've done. So there's certainly a sense in which there's continuity here. I don't find a lot of problems with this as a method of movement. It's only problematic if you think, I guess, if you were to think like, well, it's never going to do this because of this or that. Maybe you're thinking about, it's going to continue. I mean, if you think it's going to continue, it won't have this weakness and breakdown here. But everything else actually lines up quite neatly. And then we had talked about July 30th to August being kind of a downward period. Well, that may be the case, Booksy, but shouldn't the cat ear maybe set up higher so that, because I mean, you can see there's a resistance here maybe at 350. Could 350 be the one? Well, maybe. I don't know. This is the same exact question that we're asking in the short term, isn't it? Because in the short term, we're asking, like, does this actually make a full bearish S curve, or does it have what we call a shallow S curve? Well, there's a possibility of a shallow S curve. I don't want to estimate it too hard and get it like way, way off, because it's really hard to do that kind of stuff and get it really right. Well, one way to do this would be just kind of look at like what's the bare minimum and see if it makes any sense. So the bare minimum here is going through the, I don't know why that's not snapped. Probably changed. The bare minimum here should be going through that marker. Oh, I know why, because that's a trend. I use these two bottoms. But it would be going through the 239. So the bare minimum is 238. So if we went to 238, we said that's the spring. It doesn't go any lower. Does this give us like an adequate level? Yeah. Right now, if you go to, let's say 461, and you put the bottom at 238, the middle is right here, which is maybe the spring we're about to hit because it's at 330, 331. So what you're saying is whatever low we hit might be double downed on. Well, yeah. Again, like you're looking at these critical markers and you're trying to make a determination of where that might be. Well, they're using them for obvious reasons. So there was a gap value right here that began around 327. I think the closing value on that candle is actually 324. Let's see here. Yeah, it closed at 324. That's a possible one. But we're seeing that if it only goes to 461, then the middle may not need to go that low. It really only needs to go down to like 331, which kind of works better anyways with this weird triple bottom that's not a triple bottom. You guys are like, it looks like they're not even at all. Well, they're not. Yeah, 331 would work really neatly. So going down to like 331, maybe 330, I don't know, it's a penny off. Who cares? Going down to about 331, that area, anywhere between 331 and 320, it should be 333. Anywhere between 331 and 324 is a pretty simple target. It works well with everything else. So then you get this bounce up, you do like a 50-50 around 390, you hit 461, and then you've got an adequate sell down. And ultimately, probably what this would mean, and I'm not going to go much further on this because I know this gets a little bit complicated, but probably what this would mean is that your final drop down is going to kind of resonate around that area here. Again, right here in this pocket, that's exactly where it would end up because you come back through it, there'd have to be weakness, and then you'd push up, but you'd just push up to get to like some distribution level here, like 350. And then the second push up on the cat ear, and it could be the other way around where you flip-flop them, but the second push up, if it breaks down, would be underneath 331. That's right in the kisser here. It's kind of right where it needs to be going into July. So you do get a rebound off of maybe some of that July 11th news. But then ultimately the market kind of sells back away from it. So you've done a sell-off and a retracement. Be curious to see where that goes because this is a 50-50 as well. So let's go to 461. If we think that it goes all the way back down to here, which is really far, then the 50% retracement is 366. It's kind of where it's setting up right now at 362. It may make more sense to use 362 since that would be the support on the way up. Could you make it for a good interaction point on the way back down? So this could actually go all the way to like 284 and then bounce. Let's just take a look. I'm not convinced it's going to be a 50% retracement. The 382 is 340. So 350, it's like 342. So 350 actually works quite well. Like to just kind of approach it but not get there. 362 would also make sense, but that's kind of a given because that's the way I measured it. I did that on purpose. So I was looking for the next one down on the fibs. So that works. So coming back to like 350 would work quite well. I don't know why I did that. I'll just extend this out. So it's starting to set itself up with a really solid distribution schematic is what I'm trying to say. And I would say that these are just kind of micro versions of the same thing. But ultimately, that's where you'd have. This is why a distribution gets so nasty, because once it gets to this point, there's really nothing holding it up. If you look at carefully and you see like, well, there's all these other levels. Well, yeah, it's already kind of dumped them. It's going to move really fast from 320 at this point where it's selling off all the way down, you know, probably through that 265 pretty rapidly. So at bare minimum, you would have to see this. I don't know. We talk about 331. So like at bare minimum, you'd have to see that 331. And then the mid zone there, that's the 280 level. So that works. So that low that was hit. So everything kind of clicking now with these segmentations. So that is enough. If you just wanted to get down low, that's enough to get you down very quickly going into earnings, and maybe even at earnings have a drop. It looks like it's way, way off, but it's not, because this is earnings right here around the 6th. It's kind of perfect. It's a nice simple chart. Now, that point, I don't really know, you know. You're probably going to get some pretty big reactions in this area anyways and then drop down. But I think at that point, yeah, you're looking at, we're going to drop beneath 250 and probably hit some low. Now, what if it goes way further? Well, I mean, that we already know that because we just did the measurement. So the other measurement was down to 190s. So like I already have this on the chart because I know that anywhere in there is probably a adequate level. I'm thinking they might leave 190 for way in the future. I know that sounds horrible, but the way that we've seen this thing moving in this past year, the way the operators are playing it, I'm wondering if they're going to do a really long-term bottom. And that's it. And I think it's going to take off. And I think the whole market goes into a kind of a buy up in August. So to some degree, or it's already going up for some of them. They'll already be up there. So this works really, really well. Anything else here, frankly, doesn't, to me, it's like, I don't even know. Everything else is kind of speculative. This seems the most likely. Higher high here seems possible. That could be the extra length, guys. I'm just starting to look at that now. I'm like, why would you go up there? Maybe that's the extra length needed. Let me check. Let's go to 540. It looks right. Down to 361. I don't take it lightly. If things measure out correctly, then I'll take a look at that in a minute. I know you want to take a look at it. So if things measure out right, you should pay attention. So this goes to 230. I got to make sure it's in the right spot. So got a 238, 203. Still, that's really close. So that might be the extra length needed. So my guess is, I'm going to make a guess here. That's $2. I'm going to make a guess here that if it's going to go down to 2, that we actually hit the higher 5. We might actually hit the higher 540. It gets the extra distance. If we're only going to go to just below the bottom, this is working quite neatly. We just need to hit the... Yeah, that's kind of crazy. We just need to hit this top zone here at 461. So that's what I was saying. Anything else is kind of extra. Weirdly, that's kind of where that gap is too. I wonder if that was on purpose. That little extra little tidbit. I don't think it matters. I'm suggesting to you that 331 is actually a really nice number. So that gap may dangle. It may be used to as a carrot on a stick. I genuinely think this could probably get away with just dropping to 331. And I'm looking at this SOW right here. It doesn't seem to need to go lower. This is a very, very, very mild sign of weakness. we'll see what happens, because if you'll see an LSPY here. If it's going to go backwards, you'll see like a little hook and then it'll drop again. So I don't know. I expect the unexpected. I need to do is get this marker correct, like really correct. I don't know if it's actually super accurate. This one. I don't think it is. I think I just doodled it. I wouldn't be surprised if it hit the gap fill because of the so maybe the better way to draw this would be to have this drop down and just dip below. You get close to the gap fill or get the gap fill, one or the other. And then when it rebounds, maybe it comes back above and it hits. That's when it hits 331. So maybe that early advancement is really just a small advancement to 340. And then it lands on like 331. And that's where it really takes off. Oh, actually, that would make a lot of sense. Would it now? No, it would, because we usually have like a gap up zone or something random. The operators have been using these gaps quite often, and a lot of times what you get is you get this kind of like build out, and it hit a level that made sense, but then it gaps up at some other level, and you're like, why would they even do that? It doesn't make sense. Why that marker? But these often on both directions ends up being pretty pivotal points. So I'm wondering, it could be, this is very speculative, but it could be that there's a gap here going into like Thursday or something. I don't know. It's kind of last minute, isn't it? We're kind of running out of time. Really need to get down there if we're going to get down there. This could be like all day Wednesday. I don't know. I'm on the 1 hour, so it's still kind of speculative. But it would make sense if Wednesday's kind of a crappy day, then this is how you would do it. You come all the way back down and hit like some value around 331, then hit 333, and then just break out. Maybe we create another gap going into Thursday, some kind of news or something. This does kind of travel very far here. It's a very sideways motion. I don't know. We'll see what happens. It doesn't really make any real difference to me, I guess. This is just speculation. This marker, this yellow line, this is important for other reasons, because when it first jumped the creek, it established this again as resistance, support, resistance. It hasn't really used it as support except right here, and this creates a head and shoulders structure. So you can see like it found that as a support when it came up, then pushed away, and now it's finding it as a support, and then it just dropped it. So there's a sense in which it's sort of building out now underneath it. I wouldn't even be surprised if there's like a little hook or something right here, and then it drops. And then when we rebound, it should come back above there, and then find a higher low, something along those lines, right? Like this, something like that. But it's already kind of touched it, so I don't know. I guess you could say it doesn't need it. It hit it right there an hour ago. I don't know, one of the two. Anyways, it's in a really simple spot where this is like breaking down. It'll drop, and then you'll have the final kind of sell-off wherever that goes. Distance-wise, again, I would expect it to make kind of a deeper sell-off. I was looking at this as carefully as I could earlier. It's not like complex. It's just that it didn't make a really good hit here. So I don't have another anchor, but I did see it made several hits here, like really nice. So I'm thinking it makes sense. It's building out